Jim, I'll start with you. You think there's more to go in terms of this sell-off?
Not much to go. I don't think this is the big one. And I cite the fact that we're going into it yesterday. Remember that VIX levels were at 26, 27, highly elevated for, when juxtaposed against the fact that we were on all-time highs. To me, what that means is that people weren't too complacent going into this. Everybody knows it was frothy. Everybody knows it was elevated. So to me, that means it's not the big one. Something else that it isn't is the big reopening rotation where people are getting out of the 5 tech names and into the Russell. I know we've seen some buoyancy in cruise and hotels, but I don't think it's that either. I think this is just kind of market whack-a-mole. Those names, those particular 5 tech names have just gone too far too fast, and now they're getting corrected.
And it's interesting what you say, Jim, because I would have thought if this was the big reopening rotation, maybe we'd see interest rates going up on this idea that, at least longer term interest rates of, hey, the economy is looking better, things, prospects are brightening, but we're not seeing that. So then if it's not the big one of either one of those, then what is it?
To me, it's an 8 to 12% correction in the NASDAQ. I'm short the 11,000 puts. That's where I'm planning on getting long. And I think, to me, this is perfectly healthy market function to shake people out when they temporarily forget about risk. Now, what I was saying before about the VIX, if VIX was at 12 or 13 going into this, I'd be worried that people were way too out of touch with risks.
Sure.
But now I think this is a reasonable move.
All right. So, Carrie, I'll turn to you. You've got a lot of great thoughts on some individual names in particular here. But would you echo what Jim thinks overall, or are you more concerned about how much of a correction we could be seeing here?
Well, I think if you consider that the NASDAQ, let's talk about technology and NASDAQ names. It's up 18% in the last 6 weeks. There's been that feeding frenzy that's occurred about names such as Zoom, Tesla, even Salesforce, great company, bought up 26% last week on the day that they reported earnings. That's extreme. So you have more companies that are 70% or more above their 200-day moving average. This is an opportunity for people to sell stock that they've made a lot of money in very quickly. I think this move today has much less to do with the economy reopening than it has to do with the price level and the extreme extension of some of these names that have been just rocket ships recently.
I like how you put that. It's an opportunity to sell stocks. We talk a lot about opportunities to buy stocks, but you say this is an opportunity to sell, which implies you can still get good prices. It's only been a couple-day affair. Let's talk about some areas, Carrie, where you do think you can buy. There are some names that you think still offer some compelling value, and they include Facebook, which to me was surprising, but several others as well.
Yeah, well, it's interesting. I mean, Facebook is up nicely this year. It's up close to 50%, but there's a lot of opportunity. They've really taken advantage of, bringing people together, but expanding their network. People have adopted more Facebook applications than they might have otherwise. Pre-pandemic, we think it has more to go. Interest rates being low is good for them, and advertisers will start to come back. So we like Facebook. We like Charter Communications. It's U.S.-based, not a content producer. People are using more wireless. 5G is a plus for them. We like Blackstone. I mean, there's an opportunity with low interest rates. They're the biggest of the private equity companies. We think that has a major upside, 50% upside from this level here.